Financial markets are a lot calmer today. Hello traders, this is Fawad Razakzada, market analyst with City Index. Today is the 8th of August 2024. So as you can see, all the major indices have bounced back, all in the green, led by the Japanese Nikkei, following the reassuring words from the Deputy Governor of the Bank of Japan yesterday, which has had positive impact across the financial markets, including the Nasdaq 100, which was one of those markets that was hit hard by the unwinding of the carry trades as technology stocks slumped. But as you can see, the Nasdaq has bounced off the 200-day moving average. It tried to close below that on a couple of occasions this week, but so far it has held above. Yesterday we formed a inverted hammer candle, but there's been very little downside follow through, which triggered a short squeeze rally, and now the index is bang in the middle of this week's current range. So it still needs to do some work to tilt the bias back in the bull's favor, but this is a positive sign certainly if we can hold above the 200-day moving average. Key resistance is seen within this area shaded in orange. Here the index had found resistance and support in the past before breaking down last week. So as a minimum, we'll need to see the index move back above that area to create a bullish signal. Otherwise, we may chop around for the next few days ahead of the US CPI, which comes in on Wednesday of next week. But there's certainly the potential for further weakness should the Nasdaq break the 200-day moving average more decisively this time. And if it does, then we could well see a retest of this blue area, which is a more significant support zone. As I zoom out, you can see that this area was previously resistance back in 2021 and the latter stages of 2023 before we broke out of it earlier this year. We've already tested this area once in April, so I wouldn't rule out the potential for another test should the 200-day moving average break down in the coming days. But today's price action certainly looks bullish. Let's see how it will close. Meanwhile, the German DAX index is also trying to establish a base around the 200-day moving average after bouncing off this green shaded area, which was previously support and resistance. This is a positive sign, certainly. Can we see a close above the 200-day moving average today? If so, then it could pave the way for a move up to this prior support area between 17,950 to 18,050, which was price support. We could see some price action around there for the bears. If we don't, then that could potentially pave the way for an even bigger bounce towards the base of last week's breakdown at around 18,400 or so. Now, the direction of the equity markets and indeed most other markets will depend on what the dollar yen does, because that's what investors are focusing on right now. The dollar yen is bouncing back from severely oversold levels and it's now trying to reclaim this broken support at around 146.40-ish zone. Break above that could potentially pave the way for a retest of this broken trend line that had been in place since January of last year before it gave way last week. So it's not out of the woods yet, but the recovery is certainly helping to ease the pressure on the wider financial markets. The US dollar lost some of its appeal from a yields perspective following the release of weaker than expected economic data last week. And because of the turbulence in the equity markets, we hadn't seen risk-sensitive commodity currencies like the Aussie or the Kiwi show any sign of bullishness until the start of this week. Now, with the equity markets stabilizing somewhat, we are seeing the Aussie make a comeback and the New Zealand dollar as well. But looking at the Aussie here, it looks like it wants to reclaim the 200-day moving average, and if it can do that and rise back above the 66 handle, I think that would create a strong bullish reversal candle following a double bottom or a false break reversal against the April low of 63.62 earlier this week. The firmer tone across financial markets and the weakness in the dollar has helped to alleviate pressure on gold as well. The precious metal never really broke down that much following the sell-off in the equity markets as it held this bullish trend line. So now it's showing renewed strength around this 21-day exponential moving average. I think gold remains on course to potentially head to a new record high in the not too distant future. Short-term resistance comes in around the shaded grey area where previously gold had hit highs in April and May. between 2,431 to 2,450. Should it break through that area in the next couple of days, then I think gold could potentially head towards 2,500 next. Support is seen between these two blue lines, which was tested a couple of times and so far held. And should gold break below that for whatever reason in the next couple of days, I think that could then pave the way for a move down to 2,300, which is a more significant support. But my base case scenario is that we may see continued upward pressure on gold prices. It's worth keeping an eye on silver price as well, because as you can see, it is creating a bullish engulfing candle on the daily time frame. The day is not over yet and things could unravel later, but nevertheless, this is a positive sign and we could see the emergence of a new bullish trend from here. For more market insights and analysis, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.